Welcome to another episode of Millennial Investing Explained. Here's today's question. Now that we've talked about a couple strategies, I want to talk about how you can actually find some individual stock picks, and I want to talk about Peter Lynch's strategy. And Peter Lynch is a very successful investor. He was one of the most successful mutual fund managers of all time. He managed the Magellan Fund at Fidelity, and basically, in his book, One Up on Wall Street, he talks about how individual investors like you and me, the listeners and Preston, actually have an advantage over money managers and hedge funds because we're able to make investment decisions based on products and services that we use much quicker than a hedge fund or a much larger institution could. For example, if you went into Starbucks and you saw that every day you went into Starbucks, there was a line out the door, that might give you a hint that Starbucks might be a good opportunity for an investment. Of course, you need to dive into the financials more and do more research than just that. But just by seeing that, you're able to get an idea that Starbucks might be a good investment opportunity. And some of the best investors in the whole world, Warren Buffett and Charlie Munger, use this same type of strategy. Charlie even said at this year's Berkshire Hathaway meeting that everybody in his house, everyone in his family uses iPhones. And out of everything that they own, the last thing that they would want to give up is that iPhone. And that more or less is why Charlie believes in Apple so much. And to take it a step further, not only can this idea help you find good opportunities, but it can also help you stay interested in investing. If you're investing in companies you don't care about, you might lose interest in investing. But if you're investing in companies that you use every day, and now you can think, hey, I actually own part of this company that makes this product, that might help you keep interest in investing much longer, which would be beneficial for your investing career.
Well, some of your points there, you're talking about you can have a fantastic business, but if you can't buy it at the right price, maybe it's not a good investment. So let me just highlight this with the best example I can give you. I'm going to sell you a money machine, truly a money machine. Like this thing will print money and whatever it prints out, you get to keep. I'm going to sell this to you. And so what's the first thing you're going to ask me whenever I say, I want to sell you my money machine? And let's just assume that it's all legal, like the money that it makes, you get to keep. It's no problem, right? I'm going to sell you the money machine. So what's your first question you ask me?
How much does it cost?
Bingo. How much do I have to pay you to purchase this money machine? And so the money machine costs $10 million. So now what's your next question you ask me?
How much money is it going to give me?
How much money is this thing going to print per year? It's going to print $100 a year. I'm selling it to you. Like, what could possibly go wrong with buying a money machine? Right? It's literally a money machine, and I'm selling it to you for $10 million. It's a great deal, right? No, it's a terrible deal. This is the epitome of a terrible, terrible deal, because what else could you do with $10 million in a year? Well, you could do a whole lot. If you go out and you even get a 3% return on $10 million, you're making $300,000 a year, right? So I use that as an example because there's companies out there, there's stocks out there, there's all sorts of things out there that in a person's mind, psychologically, it's a money machine. It's like Apple. Like you just hear the word Apple, you're like, everybody has an iPhone, everyone has an Apple computer on the entire planet. I need to own Apple, right? But they're not asking themselves the two basic questions of, well, how much is the Apple money machine? Oh, it's this much. Okay, well, now that I know how much you're willing to sell me the Apple money machine, how much does the Apple money machine make each year? And then you answer that question. And then you can look at something and come up with an idea of whether that's a good deal or not. And what are you doing whenever you come up with the yield, right? You're looking at what's my profit margin each year for owning this? You're comparing it to your other opportunities. You're looking out there and you're saying, well, that's a great company, but it's giving me 2%. And I could go over there and buy this really super boring box company that I am calculating a value of 20% for. I'm going to take the boring box company all day long because of the price, right? Because the price is incredible. In fact, no one's trying to compete with the box company anymore. Everyone's trying to compete with Apple, though. So like there's all sorts of things. And I'm not saying Apple's a bad pick. In fact, I actually wrote a Forbes article. I don't know, it's probably a year and a half old. But at that time, it was a great value. I was calculating it to be a great value. So it really depends, but you have to look at it from that lens. You have to ask yourself those questions. What can I buy for? What's it going to yield? Just like simple things, but people completely look past that.
I really like that example of the money machine, Preston. Being a value investor myself, I certainly know how important price is, and I put a lot of emphasis on it myself, but I had never heard an example like that or had someone explain it to me like that. I certainly wish I had that when I was just starting out, because it just makes it so clear. It makes a real world example so simple and easy to follow. So if you're a millennial investor or if you're a new investor, I really recommend that you go back and listen to that again at least once, if not twice, and make sure that you really understand how price makes such a big impact on your investment returns. That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.